Hello and welcome to UAE Outlook on the UAE for 2021. I'm Zeynep Kosereisoglu. I'm the Director for Middle East Africa and Turkey Research, and I'll be sharing with you our expectations for the UAE economy and the implications on various sectors. The UAE will remain a critical market in the Middle East Africa portfolio with its stable and sophisticated economy, so no questions there. And although the UAE has actually shown an organized and effective response to COVID-19. Actually, the country's recovery will depend not only on its own abilities, but also on global trade, tourism regulations, FDI trends, all of which are actually quite out of the UAE's control. So the economy, unfortunately, was already slowing before being hit by the dual shocks of 2020, and the recovery pace will ensure that the addressable market size for multinational companies actually remains quite limited into 2022. The main growth drivers will be Expo, potential new investments that could come with the normalization with Israel, medical tourism, and some selected government projects, and also the recent changes in regulations that are likely to attract some foreign investment and minimal return of expats. But we also will have some factors that are going to be weighing on growth, which are more around that gradual tourism recovery pace, this generally weak, unfortunately, investment trends towards the Middle East Africa and just general with hesitancy of firms to invest overall, and the weak population dynamics that we have in the country. So in the next hour or so, I'll be sharing with you our outlook on the UAE, starting with a macro introduction and then moving on to key sectors before ending with some actions to take. So on the macro side, the UAE economy will return to its pre-COVID size likely in 2022, but that's again dependent on when we have how much support we get from Expo. Our numbers are assuming that Expo is held in late 2021, as this is now part of the official plans, but they are assuming more of the arrivals to come in toward later end of Expo into early 2022. So we've put more of that effect into that following year. But we still want to monitor for some downside scenario risk of delay or cancellation. We know they'll do everything possible, hopefully, to not cancel the event again, but we really want to be monitoring vaccination timelines globally and kind of confidence levels towards such mass organizations. The timing will be cutting it a little short. But if we go a bit deeper, across sectors, the recovery pace will vary. We'd expect non-durables and FMCGs to see a pickup driven, if we have that driven by Expo, but durables to see a later recovery. Manufacturing can see a pickup into the second half of 2021 alongside commercial construction, but we would expect residential construction to remain muted for most of the year, while public sector infrastructure related construction is more likely to continue. Non-COVID healthcare should gradually return to pre-COVID levels throughout 2021 with the normalization in mobility levels, but of course the addressable population size will be lower. Hospitality will of course be late to recover similarly across the world, with a significant portion of that recovery due to Expo again. And many of these sectors will actually receive a boost from the normalization deal with Israel. Clear progress is being made to increase tourism flows, investment into healthcare, technology, banking, and many others. And the ability to use one country to supply the other can also cause many multinational companies to evaluate efficiency gains in their supply chains in the region as well. But also we want to be monitoring for some competitor moves into either country from the respective companies from those countries. Now let's take a look at the public sector and government spending. In the UAE, although the country is one of the most diversified in the region, we can see that oil revenues still make up 50 to 55% of total public revenues, an overwhelming majority of this in Abu Dhabi, while more than half of Dubai's government revenues come from taxes and fees. Public revenues will come under pressure from both ends in 2020 and will not fully recover in 2021. The stimulus approach of the government has been to focus on reducing private sector costs, which will result in fee revenue reductions. Lower consumption is keeping VAT revenues muted as well. So on that front, we're seeing moderate revenues, and then the outlook for oil prices is relatively moderate as well, as we see kind of ongoing restrictions around the winter months and a gradual pickup in the economy. So the federal budget, which accounts for approximately 15% of total government spending in the UAE, registered a surplus in the first half of 2020, but the majority of the COVID-19 expenditures seem to have been burdened by Dubai and Abu Dhabi budgets. And the Emirates budgets are not yet released for 2021, but the recently published 2021 federal budget envisions a spending cut of 5% next year. So on the chart, you see the 2020 budget, which was flat, and now into 2021, there will be around a 5% cut. So clearly, there will be some kind of fiscal constraints or fiscal consolidation measures. And through this 2020, actually, the Dubai's Department of Finance ordered a 50% reduction in capital spending and delays to new public projects. The government entered a process to review all contracts. Spending on ongoing construction projects was reviewed for no cost overruns and kind of reducing new labor permits. Hiring freeze was implemented, and administrative spending was cut by at least 20%. So you see a lot of moves were taken to really protect the fiscal balance. And the government did accelerate plans to restructure the public sector to convert 50% of government services to online in the next 2 years, and merging some federal authorities. So clearly important push towards digitalization as well. And with some of these savings generated, we've seen that a lot of resources were put into COVID-19 management, which actually allowed the country to open up its economy significantly, kind of rapidly, August onwards especially, and showcase the highest levels of mobility and normalization in late 2020, and will likely take us into early 2021 as well. And you can see that from the comparative chart here on the actual mobility trends around driving. And the Emirate and federal budgets have taken measures to reduce taxes, fees, utility bills for businesses, while using the central bank to support loan growth and delaying some of the repayments. So after the majority of the stimulus has been used in 2020, mostly by large enterprises, not necessarily SMEs, the government actually is releasing, or has released, a second phase of the stimulus program to support SMEs and the tourism industry as well. So a lot of that government resources have been put into supporting the private sector and the economy overall. And in terms of spending into the future, in 2021, we still think that infrastructure projects will remain key priorities, while also maintaining some investments and tourism, especially around tourism attracting investments. Improving healthcare infrastructure and digitalization and medical tourism are also high on the agenda. So let's take a look at how the government will continue to spend through various sectors in the following sections. And we can start with the healthcare side, and the fact that, of course, we have a relatively larger private market here, and also efforts to modernize the infrastructure and innovation focus as well. These will continue to be growth drivers for the healthcare industry. But unfortunately, we have an easing population growth, some oversupply, unfortunately, in the private insurance side, and we also have coming up stricter pricing controls and potential kind of generic drug substitution, which will create some challenges for multinational companies. If we look at some key developments, recently a 6-month moratorium on healthcare claims were issued in October, and we've seen that actually, phase 3 clinical trials for the Chinese vaccine Sinopharm with Group 42, the UAE firm, they've been kind of coming to a close. And actually, we've just seen some announcements that the Chinese vaccine could be kind of certified within the UAE, although there is some controversy around the announcement so far. The government also announced 23 areas of pharmaceutical and medical investment to boost local production. So clearly after COVID-19, we started to see more of the importance being put on localizing some of these key industries, and digitalization updates were coming from authorities with quite strong kind of increases in at least adoption of digital solutions. And then we've seen that there were, even in the healthcare side, some increased MOUs being signed between kind of Israeli and UAE companies as well. And clearly Emirates might be supporting Pfizer with this vaccine transportation. So a lot is taking place in both the COVID and non-COVID side in the healthcare sector. And again, when we look at the short term, we expect the government to continue that focus on COVID-19 areas for spending in the next 3 to 6 months. This will also mean a lasting focus on infectious diseases as well, as part of the government's kind of long-term healthcare priorities. But the current environment has increased the importance of being able to locally supply some of the basics of the healthcare sector and health and digital solutions, so both of which will be attracting government attention and resources in the medium term. And then in the long term, some of the traditional areas of concern, such as diabetes, oncology, cardiovascular diseases, will remain as priorities. But we do see that preventative healthcare and again, those digital areas will continue as priorities. We will have fiscal pressures, I think we've seen from the last few slides, but bringing in high quality and niche solutions and innovation while trying to save on the generics is going to be that driving strategy for healthcare. And amidst all the announcements around that innovation from the authorities, it will be important to remember that in the background, cost has also started to become a concern in the UAE. This is not at the forefront of negotiations as we see in Egypt or in Saudi, but it will play a role in pressuring some margins from some of the older product portfolios that some companies may have. And the three key pillars of the healthcare policy moving forward, it seems, will be to boost that localization, innovation, and medical tourism side. And we see some of that innovation currently focused on COVID-19, but its investments are going also into new research centers, procuring high quality and innovative medical device and pharmaceuticals. And on the medical tourism side, there's also a key focus with quite a lot of funding going into external marketing and partnerships. And the pace of growth here will also depend actually on COVID-19, but the government has been showcasing good management on the healthcare side, giving confidence to the world. And compared to global centers such as France and Hong Kong, for example, we would expect that there's quite a bit of capacity and offering expansion needed in the medical tourism side in the UAE. And when we look a bit deeper into that kind of digitalization and high-tech investments, they're not only a healthcare priority, but actually a critical goal for the country's new growth model. This area will clearly get a lot of investment from the government, and it will be a tool for various goals to improve access, to create cost efficiencies, enhance the quality of services, and do a much better record of the country's healthcare sector and profile. So I think overall, the healthcare spending in the near term is going to be still kind of focusing on that infrastructure expansion, modernization, and the public side, and actually thinking about the economic dynamics, potentially moderate public market growth and actually a slightly weak private market dynamics until the economy can pick up, driven by that compulsory health insurance, and then some potential for slight uptick in the population with some potential expo-related employment and increased attractiveness to expats and FDI with some recent regulations. But that, of course, is a minimal, let's say, a gradual development to be monitored. Let's take a look at the oil and gas sector, another critical sector in the economy. Oil production throughout 2020 was overall weaker. And then, of course, 2019, and actually is poised for a little bit of an increase in 2021 after the OPEC decision to reduce some production cuts. But of course, alongside the production, the price side is also very important. We expect Brent crude oil price to average at around $50 per barrel in 2021, versus 40 in 2020. And the short-term price fluctuations will be driven by kind of the lockdown versus vaccine announcements and sentiment that it generates in the oil markets. But overall, a slight uptick in oil prices will be supporting the industry, but of course they're not as high as hoped for. And the industry will actually clearly present some opportunities as Abu Dhabi announces investment plans. When we look at ADNOC, it's actually the national oil company has announced around $122 billion worth of spending plans for the next 5 years on oil and gas projects. And actually the company plans to raise daily production capacity to around 5 million barrels per day, it seems, from around 4 million that we have currently. But of course, the current production levels now are around 2.6 million barrels a day with the then OPEC restriction, with a bit of an increase in Q1 2021. And I think there were some rumors in Abu Dhabi of the UAE evaluating to leave OPEC, especially after some of the kind of tensions around oil policy into 2021. But I think we've heard that the energy minister has emphasized that the UAE has been a committed member of the cartel. So that's a space we need to be monitoring, but clearly there are plans to boost energy production that shouldn't be taken lightly. And earlier in the year, actually, a group of 6 companies had invested around $10.1 billion to acquire 49% stake in the Abu Dhabi National Oil Company's newly formed subsidiary, the gas pipeline assets. And there was also an investment platform fund that was set up to increase investment into petrochemicals and other downstream lines as well. So clearly, a lot of these are going to be funded with debt issuance, for which both Abu Dhabi and the national oil company still hold good ratings. And clearly there's going to be some diversification and just traditional production capacity investments taking place in the next few years. On the construction side, it's an important area where government policy is also an important driver, and alongside the population dynamics we have and just the overall demand in the economy. On the public side, prior to 2020, the UAE government was already feeling the need to stimulate growth and was taking a strong role in boosting investments. Numerous projects were funded or encouraged by the government, and many projects here and not shown here have been kind of started, but actually now have been delayed because of the current environment. But there are still some projects that the government will continue to spend on. Any Expo relevant projects are still maintained. Energy sector investments, especially the ones that we just talked about, but also solar energy, it seems, are priorities. And expanding housing, especially for the local population, is also an area that continues to receive funding. And when we look at the project pipeline, we also see that there are some that can generate opportunities. You can see some of the areas here in energy and utilities and transportation, and being able to identify projects that continue to be prioritized, that have more sustainable funding outlook, will actually help differentiate commercial performance across many businesses. And on the private side, we saw some uptick in activity in Q3 2020. However, that has started to moderate, and the oversupply is still at critical levels. Even major players like Ammar have announced cost-cutting measures during mid-2020, and recently the decision to halt new buildings have been announced. So overall, demands for renegotiating contract terms have emerged across the industry throughout 2020, and data that has gradually come out is reflecting these as well. And when we look at the sector dynamics overall, operational challenges and rising cost, but also significant rise in uncertainty for the demand outlook still, whether that's of the tourism industry, residential or commercial, they have all weighed on the industry, but there are still some private project implementation also continuing. And working with, again, partners and local teams to identify these is going to be quite critical as well. Just some examples that you see on the slide here. And let's take a look at the manufacturing sector as well. We have also seen some weakness in the manufacturing, exports and re-export segments in the UAE. Industrial good manufacturing, supporting materials into the construction sector, those areas have been limited. Export-oriented companies producing food, hygiene products, and other consumer products that were benefiting under COVID-19 could see some slightly higher levels of activity into mid-2021. But of course, selling price pressures have been the greatest challenge for businesses across all sectors, and easing profitability is making firms hesitant with their purchases, and also creating some payment delays in terms of customers we may have in the manufacturing side. And preparing inventories for a potential kind of comeback in restrictions, although that's at this point less likely, but keeping conservative expectations for cash flow and emphasizing cost efficiencies will be key in capturing that B2B demand in 2021. Some new developments like the new visa regulations, permissions of full foreign ownership, the policy for advanced industry and others will actually attract some investments, we think, but most likely in 2023. When economic dynamics begin to stabilize and firms can have a more predictable regional demand outlook, not just for the UAE, but for the Middle East Africa region overall. And in the meantime, public entities as well have been stepping up efforts to bolster that manufacturing side, some of which you can see here. There's clearly some efforts to diversify the local manufacturing capacity as well. These are likely to be quite narrow as to the ones that you see here, but capturing those niche opportunities are what we have to really get ahead of competitors in 2021. And then let's take a look at the selected some service industries as well. And clearly important to start with the real estate side. We've unfortunately seen the downward sales and rental activity hit severe lows under COVID-19. As you can see from some of the numbers here. And prices, when we look at the price side, not just the activity side, we're seeing that they have also hit levels lower than what we have seen in the previous kind of financial crisis. In 2020, new building construction was around 2,480 versus 6,665 in the year before. So a clear drop in also new construction related to this drop in demand. But the government has stepped up efforts to vitalize the sector. First, it is trying to control further increases in supply through its real estate kind of management organizations, but also issuing numerous regulations to attract demand. And again, we'd expect more of those regulations to materialize into moderate increases in demand 2023 onward, not necessarily 2021 or even early 2022. And when we look at the tourism sector, the sector actually halted under COVID-19, but has shown some pickup in late 2020. And of course, the lockdowns and restrictions in European markets or even in Asia aren't really helping in early 2021. And we know that China, despite its containment of COVID-19 domestically, is restricting, or let's say frowning upon and restricting international travel. We'd expect tourism to pick up throughout 2021, but the Q2 numbers should still be around at least 30% lower tourist arrivals than in 2019. Expo will support some of those tourist arrivals for sure, but as I mentioned, even if the event isn't cancelled or delayed, arrival numbers will inevitably fall short of original plans and could see a more gradual increase into early 2022. And lastly, on the financial sector side, unfortunately, banks have been reporting serious profit losses throughout 2020. Profit drops have ranged from mere 3% to 70% across the country's major banks in Q3 of 2020. But profit declines were limited, at least a little bit limited by the central bank's 256 billion dirham economic stimulus program. Under the targeted economic support scheme, banks were instructed to allow borrowers to defer repayments, interest, and the principal due on loans. But then they were also, of course, given the chance to obtain interest-free funds from the central bank. And when we look at the industry, many banks have actually been experiencing payment deferrals, definitely using up this allocation. And unfortunately, despite these programs, bad debts have increased in the industry. Provision for bad debts have also started to increase, especially more for smaller banks. So the rise in non-performing loans has also been concerning. But we're likely to see these stabilize in mid-2021 and probably kind of return a little bit to that recovery area in 2022. And let's take a look at the consumer sector in the UAE. To start with that outlook, we'll need, of course, to share our expectations on the expat population. The UAE relies heavily on that population to be able to create domestic demand, as you can see on the slide here. So unfortunately, the addressable market size has reduced structurally in the UAE. Population growth has declined over the last few years with fewer new expat arrivals. And this has been exacerbated by COVID-19. We'd expect around 700,000 expats to have left the country by the end of Q1 2021. Increasingly, more of the labor force has also been employed in the construction and manufacturing sector jobs, meaning any increases in employment levels were actually driven by lower to middle income populations. Plus, we are seeing just a general lower employment environment. Private sector firms have been reporting reductions in their labor force consistently in surveys since 2019 and even more so in 2020. So this is resulting in a stagnant, if not falling, consumption base of the middle to high income consumer segment for 2021 as well. Plus, of course, we do need to consider that over 20 million tourists arrived in the UAE in pre-COVID times. And the loss of such a large number from the consumer base of around 9.8 million will definitely ensure the market size for consumer goods companies remains below 2019 levels until around 2023. So we have a gradual recovery pace here for sure. But the higher income population and e-commerce channel definitely present opportunities. The income levels of the local population and of the middle to high skilled expats there remain relatively high and resilient. And this will continue to provide an important customer base that will seek innovative products and could support still margins relative to other countries in the emerging EMEA region. And the tech-savvy consumer base here will increase their own reliance on online shopping in the years ahead. And while price sensitivity also there likely to be a concern, demand for high quality, connection to international consumer trends and premium purchasing preferences, we think will still remain. And on that kind of online side, we have seen reports showing at least double-digit growth in most categories of online shopping in the UAE. And the UAE, of course, is one of the countries with the highest conversion to online shopping and the highest likelihood of retaining online shoppers, creating an important avenue for opportunities for multinational companies. And capturing this opportunity is not easy, however, and we can see that actually the particularities of creating an online experience for consumers is going to be quite difficult. We need to be watching kind of price sensitivity, ease of product comparisons, and different kind of priorities and preferences online. There's quite a lot to monitor about the changing consumer trends in this space. And I think with that, we can conclude our outlook on the UAE and share with you some of the polling results from our executive roundtable in November that actually showed that executives are quite concerned about a slower than anticipated demand growth, which will definitely necessitate some scenario planning, especially for the UAE in terms of scenarios for tourism, scenarios for expo, as well as kind of scenarios for the private sector and how the rest of the region performs and impacts the UAE. And executives are also focused on improving receivables and adapting their offering to changing market realities. And of course, customers downgrading is still a concern in the UAE as well, even though not as much as in other parts of the Middle East. And we have been hearing that most executives are hesitant with their investments in 2021. Many companies are in a wait and see mode to kind of evaluate how demand is going to recover. But there's still, we see quite important resource allocation towards enhancing local team skill sets and very much into online marketing and virtual engagement infrastructures across all industries. And when we look at the UAE more Specifically, we would expect that we need to reassess the customer base assumptions across the Gulf, but specifically for the UAE, considering some of the changes in the population dynamics, but also the investment dynamics. But it will also be important to identify the resilient sectors and business customers that feed into those segments, and of course maintaining close contact with the larger clients to observe shifts in their budgets and investment sentiment into 2021 as well. And the utilization of scenarios is very important, but at the same time, many executives now are focusing on finding that new normal, or the optimal balance between the online, offline, on-trade, off-trade balance. That's going to be critical focus for a lot of companies, and also capturing innovation. And the UAE is a great market to try out a lot of innovation across the Middle East portfolio. Trying to anticipate long-term shifts in customer behavior, trying to strengthen supply chains and build best-in-class omni-channel is going to be essential for 2021 and beyond. So with that, I'll conclude our outlook on the UAE. For more insights on this market, please refer to our online portal, frontierview.com, and don't forget to use our mobile app, FrontierView Mobile, for frequent updates on the UAE's outlook. Thank you very much.